All right. Well, good morning, everybody, and welcome to another Simply Tax Talks live stream. We're excited that you joined us here today. I'm excited because we've kind of got the full crew together here. We've got Tad and Yelena both back and kind of share their takes. So we get Tad's takes as we always like to get them. So we've hadn't had a chance to have some of those in a while. So Tad, thanks for being here. Yelena, we've even had a couple specific requests for the tax cases that we teed up last week, or I should say 2 weeks ago on May 3rd, which, by the way, if you're watching at home here, you can go back and get the archive of that and find out if the BBB is back, as we talked about, right, Yelena? So, but I'm excited to get the rest of the tax cases there. And like I said, I'm not alone. We've had some asks for it. So, yeah, welcome to you both. Thanks for being here.
Hi.
All right. Well, let's jump right into our top tax topics for today. And I think we just pick up right there, Yelena. Let's talk about some of the tax-related developments that have been happening from a court perspective, and some decisions that may have, or maybe a lack thereof, that may have some impact on where we're going and what the role is, even if we don't know from a tax rule perspective where some of the legislative pieces are falling. So yeah, what's been happening lately?
Yeah, there's actually been a couple tax cases that went up to the Supreme Court, which is kind of unusual. I mean, each session we'll hear a couple tax cases, but there were more than usual this last session. So the big one that came out that made headlines was about a missed deadline. So there was a law firm and the IRS Office of Appeals put a levy against a law firm. I think it's Bochler PC, if I pronounced that correctly. But the tax code says that the law firm had 30 days to file a petition with the tax court to review the Office of Appeals decision. And the law firm missed that deadline by a day, so they filed a day late. And according to the tax code, if they file a day late, the tax court no longer has jurisdiction, so they can't hear the case. So the law firm disagreed, saying that the 30-day deadline was non-jurisdictional, which is a legal word. And basically means if something's non-jurisdictional, that means it's not subject to equitable tolling and the tax court can't hear it. So the law firm sued. And equitable tolling is a legal concept that says that a statute of limitations won't bar a claim if the plaintiff, despite reasonable care and diligent efforts, did not discover the injury until the limitations period expired. That's all legalese to say that you did your best, but you didn't realize there was an issue until the statute of limitations expired. So in this case, equitable tolling would have allowed the tax court to make exceptions to the rule in special circumstances and pause the property seizure filing deadline if they could hear the case. So if the tax court could hear the case, they could have made a special exception for this law firm just because they were a day late. But because the IRS said this was a jurisdictional deadline, the tax court can't hear it, so the tax court can't grant an exception to the law firm. This went up all the way to the Supreme Court. The Supreme Court voted in favor of the law firm, and they issued a ruling about 2 weeks ago with a decision saying that the 30-day deadline to challenge IRS property seizure decisions is non-jurisdictional, so it's subject to equitable tolling. So basically, this just means that the tax court can hear cases, even if they're late in certain situations, regarding challenges to IRS property seizures, and they can make exceptions. Again, it's not going to be every single case, but it just opens up the opportunity for the tax court to do this. And this decision is helpful for taxpayers who file tax court petitions to review due process determinations. And the IRS has issued or has said informally that they are reviewing other deadlines that may also fall into this rule. So technically, this only applies to property seizures levies issued by the IRS Office of Appeals, but it could expand and get a little bit more influence to other deadlines. So the IRS is reviewing if this could potentially impact other deadlines. So again, it's more of a procedural ruling, but it does make a difference in certain cases.
Yeah, it's pretty fascinating, right? I mean, because, and maybe this is something that comes to surprises some taxpayers, right? And even some tax practitioners. I mean, those rules like that, when you deal with deadlines and whether or not you're under the statute or you even can do anything, I mean, they're pretty hard and fast. So, I guess anything that would soften that a bit is probably really welcome, particularly to the law firm, right?
Yeah, well, it's a law firm. When you think of pro se taxpayers, so pro se taxpayers are plaintiffs who go before the court without an attorney. So if you think about any lay person filing a deadline, if you're a day late, all of a sudden you're out. Like there's no like excuses. There's nothing, at least according to this specific code section. So this kind of gives the court some like leeway to say if there's a good enough reason, special circumstances, they can pause the seizure filing deadline and kind of work with you. So this is a big deal in certain cases. So I mean, again, it's not for all IRS deadlines. This was specific to one IRS deadline, but
Yeah, pretty narrow.
IRS is looking to see if there's maybe similar statutes that could be impacted by this decision.
Yeah, absolutely. Now, speaking of the Supreme Court, and obviously there's many other things in the Supreme Court outside of tax considerations, but I think there was another one perhaps that has some interesting tax implications, I guess we'll say as well. You talk about that one?
Yeah, so we were watching this one to see if it would go to the Supreme Court, and it did not, but it's something still to watch for and be aware of because different states have different rulings on this. So this has to do with billboards. The Supreme Court recently issued an opinion in a tax called Austin versus Reagan National, and they upheld an Austin, Texas ordinance banning businesses from advertising on digital billboards or signs advertising goods or services not located where the sign is. So it's called off-premises signs. Basically, if I'm selling, let's say I'm selling cookies, on my business property, I could put up a billboard advertising the cookies I sell, but I can't put like my neighbor's advertisement on my property. So it has to be like where you're selling, there you can put a billboard. You can't just put a billboard in any random plot of land advertising your goods or services. So this went up all the way to the Supreme Court, and the court said this isn't a violation or restriction of free speech under the First Amendment because the ordinance is focused on location, not content. So the city wasn't banning the content on the billboards, just where you could put the billboards. So a few days later, the Supreme Court declined to hear 2 other billboard cases, and these were the tax ones. So the other 2 billboard cases were brought by billboard advertising companies challenging excise taxes by the cities of Baltimore, Maryland, and Cincinnati, Ohio. So the Maryland Court of Appeals, which is the highest court in Maryland, upheld about Baltimore tax, saying advertisers don't have the same free speech protections as the press. On the other hand, Ohio Supreme Court, again, the highest court in Ohio, struck down Cincinnati's billboard tax, saying the tax impermissibly targeted a group of speakers. So you have 2 different states with 2 different rulings on the exact same issue. And this is kind of the poster child of what goes up to the Supreme Court for it to be the tiebreaker, right? Because you can't just go from state to state and have just different rules on the same thing. And so they went up to the Supreme Court, but the Supreme Court declined to hear either one of those cases. And so went back to the states. So as of now, again, this is something to watch for because depending on the state you're in, it could be a different implication on whether the excise taxes on billboards apply or not, whether they're constitutional or not. So there's something to keep an eye on, depending what state you're in, especially if you're a billboard advertiser or you have billboards on your property or your business property.
Very interesting. Yeah. Okay. Well, I know there's some others, so I'll just kick it right back to you. What else do you have for us here, Yelena?
Yeah, there's actually another Supreme Court case there's another case the Supreme Court declined to hear, which is a review of the Second Circuit's opinion that the Tax Cuts and Jobs Act's $10,000 SALT cap is constitutional or not. So that went up to the Supreme Court, asking them, hey, can you rule on this? They said no, pass. They didn't take up that case. And so we keep seeing all these states passing workarounds around the SALT cap. And so that's kind of ongoing as well. Did not make it to the Supreme Court. Another decision, this is not a Supreme Court decision. This is out of the Third Circuit Court of Appeals, but it's kind of important to note, especially from the bankruptcy realm. So the Third Circuit U.S. Court of Appeals held that the Affordable Care Act's penalty for not having health insurance, which again expired, is no longer law. But this is again important because bankruptcy comes up and it has debts that were maybe in force before this expired. So the court ruled that not having that penalty is a tax under bankruptcy law. And so therefore it's entitled to payment before other claims in bankruptcy cases. So this is important and relevant to Chapter 13 bankruptcies because based on the fact that tax debts get paid before other debts in a Chapter 13 plan, that means if you had a tax debt like the penalty in prior years that you didn't pay, that would get paid out first. It gets priority. So it's a very niche ruling applying to certain bankruptcy plans. But it's another ongoing decision in this Is it or is it not a tax under the ACA? So it's been, litigated over and over again over the years. It did go to the Supreme Court in a different case, but this was specifically in the bankruptcy realm. So there's something more to be aware of if you work in bankruptcy or you have clients considering bankruptcy.
Okay. Very interesting. Yeah. Okay. I guess, yeah. Any other ones that you would highlight or maybe that you're watching that would have some implications for either practitioners or taxpayers or just the tax world in general?
I don't think so. I think those are the ones, the big ones that I've seen my eye on recently. Of course, we'll keep looking. The Supreme Court session ends at the end of June. So we'll see what else they issue before then.
Certainly. Yeah. And even outside of those, and of course, like we go back to each year, we kind of tend to count down the top 10 cases, and I should say not ours, but necessarily, but our recurring guest, Tony Nitty, comes on and we'll talk about a lot of the cases there as well from the year in no particular order of what he sees. And you can go back and look at the 2021 cases and previous years as well, for that matter, because honestly, a lot of the issues are recurring and, they kind of tend to come back. But we'll look forward to kind of seeing what lands for 22, obviously, as well. So another good reason to make sure you're subscribed so you can make sure you get the additional content that comes down the line. So maybe Elena and Tad, feel free to jump in here as well on some of these. We had the update on kind of what's the tax latest in Washington. We talked through some of that 2 weeks ago. So maybe Elena, I'll start with you on it. What has transpired since we last spoke? And again, if you didn't catch the conversation, we do have that archive on the channel here. But what's sort of going on from a tax perspective in Washington these days?
Well, but you haven't really heard much about the Build Back Better Act version. I can't keep track which version it is, this new year version. There's nothing really coming out of that. Most everyone right now is talking about the semiconductor / domestic manufacturing bill, which has bipartisan support, and the conference committee that was assigned, which includes House and Senate members, to negotiate the differences between the two bills. So the House passed its own version of the bill, the Senate passed its own version, and now the two get to meet. I think there's about 90, I want to say, people from both the House and the Senate who meet, and they try to negotiate and merge the two bills into one bill. So they'll start meeting this Thursday. And some of the leadership is saying, hey, we need to get this done by Memorial Day, which is ambitious. Others are saying, hey, we have until elections in this fall to finish this bill up. So, I mean, it's kind of a big range of time, but they'll be negotiating that. And it's mostly non-tax related provisions in there, but there's a couple of tax provisions that could make it in there. So there's talk about including a 25% tax credit for investments in manufacturing facilities or related equipment. And then there's a representative in the House who wants to add an extension on taxes owed by auto dealers who have been hurt by chip shortages. So just the way that the accounting methods work, based on inventory at the end of the year for auto dealerships, it could impose a higher tax bill than really in reality they should be paying. So this could make it into the bill or could not. Another one that we're watching is 100% R&D expensing. That's a big priority for both sides of the aisle, and they want to plug this into some sort of legislation this session. And as of now, it looks like the domestic manufacturing bill will pass, or at least has the highest chances of passing compared to everything else because it is bipartisan support and already passed the House and the Senate. And so the Senate actually voted 90-5 earlier this month to instruct the conference committee to include the 100% R&D expensing in this bill. But it's also important to note that the House and Means Committee ranking member Kevin Brady does not want any kind of tax titles in this bill. So there's some opposition, including any tax. And there's a couple of things that there's some lobbying for that we've seen come up. So we're kind of watching to see what actually makes it into there. But again, they're just starting to meet this Thursday, and they'll hold public and private hearings, and we expect a lot of speeches and a lot of political negotiation going on. So I think that's a big one that we're watching. There's a couple other smaller bills that have been introduced, but the one that's trickling to the top is this domestic manufacturing legislation, and then potentially an energy and climate bill. We talked about it last time. There's been some interest from Democrats to push this through, so they would take the energy and climate provisions out of the Build Back Better Act and make it into its own bill, probably smaller, but some kind of version of it. And we've seen some different policies pitched that would be included in that. For example, a border adjustment tax, because some European countries are passing that. But there's not having any official movement on that. It's just kind of different plugs from different politicians on the Hill as of now.
Yeah, I think I would add on probably the item that is probably got the best chance of getting through it, just how it's going to be that expense going to the R&D. That's a big deal. Everybody is backing that. Everybody realizes that it needs to be back in there, but like Elena said, is that they just need to get a vehicle for it. There's a couple of other ones you put it as part of, some extender legislation, that could be back later in the year, to come back along with maybe a couple of other provisions in the extenders. But I do think that R&D thing is going to be the biggest one. But, just to tell you kind of how ridiculous some of this legislation is, Elena's been talking about the America Competes Act, the semiconductor bill, and now Brady doesn't want any tax titles in this thing, but if you look in there, one of the things that's been thrown in there has to do with Wisconsin mink farming. So apparently there's a provision that, is to do away with mink farming in Wisconsin, but Senator Johnson wants to throw a provision in there that, allows the mink farming to continue. And this isn't a damn semiconductor bill. So you can see how kind of goofy some of this stuff gets and why it gets, really gets bogged down.
Yeah, I the connection between the mink and the semiconductor, it's maybe stretching it a little bit, perhaps. I don't know. I can't even come up with a clever way to say that, other than obviously the obvious needing a vehicle for things. But yeah, that 100% research and development deduction. I mean, that is a big deal. And I know we'd had Mike Bowenzi on previously. Again, mentioned that in our last session as well. But actually, we'll have an upcoming episode of the podcast where we take a deeper dive on that and some of the planning and the things to be thinking about there and the differences between that and the RDE credit and what goes into it. I just think it's a good time to be looking at it, particularly with some of those proposals. I mean, you mentioned that, Elena, the 25% credit there for manufacturing facilities and whatnot. I mean, that could be pretty impactful for those in that space. So absolutely. But, you'd mentioned that some of the other provisions, maybe of the Build Back Better, are getting stripped out. So again, would it look like the semiconductor bill would be the place, or is you just saying maybe more in general that we might see that, those things kind of get stripped, or an energy climate bill?
Yeah, I think if anything, it'll be the energy and climate bill, just because energy and climate is an easier sell for voters. And remember, Democrats are worried to lose the House and the Senate this fall for midterm elections. And so they're trying to go for, I call them easy wins. So things that have political capital and voters like. And, energy and climate always seems to be the least contentious one. And so that's the talk. But even then, it's really unofficial discussions at this point, and different Congress people saying, hey, I'm open to this. So, this is the one thing that we can maybe all agree on from the Build Back Better Act that we could actually maybe pass before elections. But as of now, the focus is on the semiconductor legislation. There's also funding for Ukraine, for the war. That's been a priority. There's been confirmations for various positions within the government. It's kind of they've been working on mainly. But it'll be interesting to see as the election comes up closer and closer, what the Democrats choose to push through, because they do need to push something through before elections if they have any chance of.
Well, one of the things to remember with that Build Back Better Act is that it is a reconciliation bill. Okay. And technically it only needs 50 votes. You don't need the 60 votes in the Senate to avoid the filibuster. Because remember, if it's not a regular bill in the Senate, you really need 60 votes. Because, once you get it to the floor and a senator calls for debate, it takes 60 votes, to get it off the floor. So that is a bit of an issue why they may want to keep the BBB in name only, but strip it down into something else, because they do only need 50 votes, to get that one through.
That's a great point to add, that the fact that budget reconciliation is still on the table here means that, they're, again, got to get everybody's rolling the same direction, I guess. Right. Which obviously was the challenge at the end of the year last year. But if you can land on something, then you can make something work there from the Democrats' perspective in the Senate. So maybe with that, why don't we move on over to Tad's Takes. All right, Tad. I've said it before. I'll say it again. I always like to get your take on things. So, what is your take on kind of just general? I'm going to go broad on you here. Where do you want to go? Maybe the legislation that we're talking about, some of the things that are still on the table, things you're seeing. What's on your mind, Tad?
I mean, I think probably the first one is, in the realm of, overreaction to something here within the last week or so. And I think it's, made quite a few headlines where the IRS had destroyed some documents, which, if you don't read beyond the headlines, it seems maybe a lot worse than it is. Yeah, destroying documents probably isn't the best thing in the world, but these were damn 1099s. Is what they were. And there were 1099s from, I don't know, 2020, and there were paper returns, and again, so the IRS made the decision that they couldn't process them because they were getting to be a year old. And so they ended up, shredding a number of them. And once that got back to the senators and got back to the Congress, it was kind of, everybody was up in arms about this thing. Now they're calling for Commissioner Reddick to be fired over this stuff. Well, fire him. He's only got 5 months left anyway before he retires. But, honestly, he's probably been the best thing that could have happened to that agency. I mean, he's a guy who lived in our world. I mean, he was a tax attorney, before he took on that role. So anyway, that, I guess, kind of in the realm of overreaction, but you see a lot of headlines about it, and, congressmen getting up on their podium, their soapbox, and, just one more thing to, because again, everybody hates the IRS. So this is a good thing for them to coalesce their constituency, behind them. So actually, honestly, the accounting profession, more the enrolled agents, have really been, kind of lambasting, the servers on this as well. But honestly, I don't see that's all that big of a deal. It's not like, there are a bunch of amended returns out there where, people getting refunds. These were, like I said, they're damn 1099. So maybe a bit of overreaction.
I think the reaction has definitely struck a chord, it seems like, with the IRS at the very least. I know there was an update posted yesterday to their website that was sort of defending the decision and trying to help to put it in perspective, perhaps, that it's 1% or maybe less than 1% of all the documents, right, and things like that. So it is interesting, and the headlines can definitely ruffle some feathers at the very least. To your point, Ted.
Yeah. Just a couple of other things. There is some, maybe a couple of other things to look at legislation wise. The extender stuff, which typically that doesn't get, passed until later on in the year. But with the election and things, I'm just not sure what's going to happen. But there are 2 or 3 things out there that we haven't discussed yet that really could be the subject of, hopefully favorable extender. One is the phase out of bonus depreciation. If you remember, that starts next year. Mm-hmm. Still have 100% bonus this year in 2022, but starting in calendar 2023, you're losing 20% of that a year. It's 80% bonus, 60, 40, 30, or not 30. Like I said, I always have a hard time with numbers on these things. So, but anyway, the phase out starts. And so that's been such a popular item. And so that may continue on in some form or fashion. It also may feed into that 25% credit, in the bill, the Competes Act that Yelena was referring to. Because my guess is that if you get bonus depreciation, that you're probably not going to get the 25% credit as well. But I'm not sure how those two are going to interact, if they will interact at all. So, but the other one, and again, I think this is going to be a stealth one out there that a lot of us, probably haven't been paying a lot of attention to, and that's the 163J recap, or the new calculation of your base amount. Remember before, your base was EBITDA, for the most part, earnings for interest, taxes, depreciation, and amortization. Effective this year, you lose the DA. So you don't get to add back the depreciation and amortization. And for capital intensive industries, that's going to be a really, really big deal. And we're going to see, I think, a lot more people that are going to fall under that interest expense limitation of 163J, unless they extend that to include, continue to include EBITDA as opposed to EBIT. So those are 2 things we're going to be watching. But again, usually they don't get those things done till the end of the year, but you got to pay estimates in and those type of things in now, based upon what the rules are now. But I think that 163J deal is going to be a lot bigger item than, maybe we're looking at right now.
I agree with you, and we're already starting to have those conversations with those I work with, and as well as the R&D, as well as the bonus, and just there's a lot of things to look at, and I think you kind of have to take a multi-year approach and play the what if game, right? Because you don't know what's going to happen, but yeah, I mean, Ted, maybe what I'm hearing you say is that extenders are going to kind of be a bigger deal. Not that they're not generally a big deal, but I feel like perhaps even a bigger deal than they often are. Because those are some pretty impactful.
Those two are I think really are pretty big. I think the R&D thing will get through some other means.
Sure.
Thing just got broad support. So I think that one will get through. So we'll see what happens. But the calendar, that's out there right now for Congress. I mean, these guys are not the hardest working people. When you look at when they're in recess, but they're basically here until end of May. They're off for a week. They come back, work pretty much for the month of June through July 8th. Then they take off the full month of August through after Labor Day. So that's why everybody is saying effective you have till the end of July to get this stuff passed, because they're off from July or for all of August and through that first week of September after Labor Day. And once they come back, everybody is pretty much thinking they're going to be dealing mostly with the midterm election stuff. So again, I think July is kind of that target date, and I think it's going to be ambitious.
Yeah, no, I don't disagree with you. The days are getting numbered here, as they say, right? So, well, why don't we land the plane, as a mentor of mine used to always say, with the kind of the top takeaways from today. Elena, I'm going to go back to you first. What are you going to be looking for maybe in the next 2 weeks here? As obviously heading into that Memorial Day holiday.
Yeah, so I'm still monitoring all the different legislation that's being pitched and introduced in Congress, both in the House and the Senate, because everyone's still, again, remember, in Congress looking for the right vehicle to pass something. So they're trying to get something either through the budget reconciliation process that requires only 50 votes from the Democrats, or something they'll have bipartisan support and they can pass in general. So we're kind of just eyeing to see what is being introduced and what is going to trickle its way to the top and be included ultimately in whatever vehicle the Democrats try to pass before midterm elections. And so it's just kind of keeping an eye on a lot of different things going through Congress, being pitched, being said, because right now no one really knows what's going to make it to the top. So just kind of keeping an eye on things and seeing what gains steam as we go forward.
Okay, sounds good. Tad, other than 30 million documents getting destroyed, what are you looking for here in the next 2 weeks?
I think you just have to sort of pick what you're going to pay attention to. There's a lot of silly stuff that comes out. I mean, Yolanda and I see them every day. The bills that are proposed that don't have a snowball's chance in hell of getting through, but that's something that the senator or the representative can send back to their to their district and say, look, see what I'm proposing. I've got your back on this stuff. So a lot of that stuff, I mean, it will never see the light of day, but it gets a headline for a day that somebody proposed a bill. So I think what you end up seeing is, the items that we discussed today, the 2 or 3 or 4 items are the ones that are going to float to the top. It's just, question of in what form, what kind of effective dates and things like that. But you just got to kind of sort of pick your battles here about what you want to pay attention to and
yeah, I love it, Ted. You always do such a great job of boiling it down or just giving the take, and even just saying, you got to sometimes just not pay attention to stuff that doesn't really have a chance of going anywhere. So I appreciate that very much. So thank you, Tad. Great as always to be able to have you back. And Elena, thank you for continuing on with the tax cases. There's just always something interesting going on in the tax world, even if the legislation is not necessarily clear where it's headed. So the two of you just do a great job, and I can't thank you enough for what you do. And I guess I'll also conclude here with just thanking you for watching at home. Again, make sure you subscribe to the channel. We started these live streams. Gosh, we've been going on a number of months now. We're exceeded 6 months, kind of just trying it out, and we've had some really good feedback. But the goal is really just to engage with you, to be able to have a conversation. So please don't feel shy to chat in your questions or email it in. If you're watching after the fact, put it in the comments below. We do keep an eye on those. You can always email us at simplytax@bkd.com. had a pause a little bit because with our agreed upon merger, that'll be changing. We'll talk more about that. And actually, maybe that's where we'll land for today is we'll do one more session here in May. So we're kind of doing every other Tuesdays, right? So we'll be back on the 31st, and which we'll also be talking about. That'll be kind of our last day before our agreed upon merger, something we're very excited about here at BKD. So with that, I want to say thank you again for watching, and have a great week, and we'll talk to you all soon.